Ever bought because RSI was oversold and price kept falling? Or sold because it was overbought and price kept rising? It feels like RSI is lying, but it's not. You're just seeing noise, not real momentum. In this lesson, I show you why RSI gives fake signals, how to filter them using the RSI Moving Average, and a complete strategy you can apply immediately on your chart. So stay with me until the end. The real problem with normal RSI. Look at the RSI line on your chart. See how fast it moves up and down. It reacts to every small price change. This creates a big problem. In strong trends, RSI can stay overbought or oversold for a long time. Beginners often act too early, selling in an uptrend or buying in a downtrend. In sideways markets, RSI keeps giving signals while price barely moves. So, what is happening? RSI is measuring two-term speed, not confirmed momentum. It's too sensitive. Think of it like a microphone that picks up every small sound, even background noise, like this sound.
Although it may have disappointed many in the technology industry,
you hear everything, but not all of it matters. So the question becomes how we filter the noise and keep only meaningful signals. The answer is simple. We add a moving average on the RSI. Introducing the RSI Moving Average. Inside TradingView, you can add a moving average directly on RSI. It's called RSI-based MA. Go to the Indicators section, add RSI, and then open the settings. In the Style tab, check the RSI and RSI-based MA and uncheck the other options. You don't need them. Choose the red for RSI and yellow for RSI-based MA and make the lines a bit thicker to be more visible on the chart, and then click OK. Now look at the chart. This is very important. We are not adding a moving average to price. We are adding moving average to RSI itself. In fact, the yellow line is a smooth version of RSI. We are smoothing the RSI itself. What does smoothing mean? It means we remove small fluctuations and keep the general direction. Normal RSI shows raw data. RSI MA shows filtered momentum. Now when RSI, the red line, moves, we compare it to its own average, the yellow line, behavior, and this gives us something powerful, momentum confirmation. Understanding momentum properly. Many beginners think trading is only about direction, up or down, but professionals focus on strength. Momentum is the force behind price movement. It's not just about where price is going, but how strongly it's moving. Here, two cars driving up a steep hill. The blue car is moving faster and stronger than the green car. This is momentum. It shows which one has more power. Now look at your chart. When the RSI red line crosses above its moving average yellow line, something important happens. Current momentum becomes stronger than the recent average. This means buyers are gaining power and we can consider a buy position. When the RSI red line crosses below its moving average yellow line, momentum weakens or shifts downward. This signals we can consider a sell position. Instead of reacting to every RSI level, we watch when momentum actually changes. In other words, these crosses show a change in strength, not just price movement. Markets move when strength changes. This is the key idea of RSI and RSI Moving Average strategy. The professional trend filter. Before we talk about entries in this strategy, we must understand something critical. Momentum signals are stronger when they agree with the bigger trend. Trading against the main trend is like swimming against a strong river, possible but difficult and risky. So we add a simple professional filter, EMA 200 on price. When price is above EMA 200, the long-term trend is bullish, so we only look for buy setup. When price is below EMA 200, the long-term trend is bearish, so we only look for sell setup. This filter removes many low-quality trades. Momentum shift plus trend direction. This combination is powerful. Entry rules explained clearly. Now we bring everything together and prepare the chart step by step. First, go to the Indicators panel and add RSI to your chart. Open the RSI settings. In the Inputs tab, set the RSI length to 14. Then set the smoothing length to 14 as well and choose SMA as the smoothing type. Now move to the Style tab. Here keep only three things visible: the RSI line, the RSI based MA, and the RSI middle band. Uncheck everything else to keep the chart clean. Set the RSI middle band to 50. This level is very important because it separates bullish momentum from bearish momentum. Above 50 means buyers control the strength of the market. Below 50 means sellers control the strength. For better visibility, change the color and thickness. Make the RSI line red, make the RSI based MA yellow, and make all lines slightly thicker so they are easier to see. Then click OK. Now we add the trend filter. Go again to the Indicators panel, search for EMA and add it to the chart. Open the EMA settings. In the Inputs tab, set the length to 200. In the Style tab, make the line a bit thicker so it's clearly visible, then click OK. Now the chart is ready. Let's define the trading rules. Buy setup. The first thing we check is the EMA 200. If the price is trading above EMA 200, the market is in a long-term bullish trend. This means we only look for buying opportunities. Next, look at RSI. The RSI must be above the 50 level. This confirms that the bullish momentum is active. Then we wait for the momentum trigger. When the RSI crosses above the RSI-based moving average, in other words, when the red line crosses above the yellow line, this shows that current momentum is becoming stronger than its recent average. This is our buy signal. We enter the trade only after the candle closes. For sell setup, everything works in the opposite direction. First, price must be below EMA 200. This tells us the market is in a long-term bearish trend, so we only look for selling opportunities. Second, RSI must be below the 50 level. This confirms bearish momentum. Then we wait for the trigger. When RSI, the red line, crosses below the RSI-based moving average, the yellow line, momentum is weakening to the downside. This is our sell signal. Again, we enter the trade only after the candle closes. Real market examples. Buy trade. Here price has been moving upward for some time and is clearly above the EMA 200. This tells us that long-term trend is bullish, so we only look for buy setups. Now price makes a small pullback. During this pullback, RSI drops slightly but stays above the 50 level. Then something important happens. The RSI red line, which was moving sideways for a moment, crosses above its moving average yellow line. This tells us that short-term momentum is accelerating again in the direction of the main trend. When the candle closes after the crossover, this is our confirmation and we enter a buy trade. We set the stop loss below the most recent swing low to protect our trade, and we set the take profit at about twice the stop loss distance, creating a 1-to-2 risk-to-reward ratio. After entry, price continues moving higher and eventually hits our target. Sell trade. Here in this chart, price is clearly below the EMA 200, showing a long-term bearish trend. We ignore buy signals and only look for sell opportunities. Price makes a temporary upward retracement. During this bounce, RSI rises slightly but remains below the 50 level. Then momentum shifts. The RSI red line crosses below its moving average yellow line. This shows that bearish momentum is strengthening after the pullback. When the candle closes with the crossover confirmed, we enter a sell trade. Set the stop loss above the most recent swing high and the take profit at about twice the stop loss distance. Soon after entry, price resumes falling and hits our target. Okay, that's it for today's lesson. Now you understand something very important. RSI alone shows reaction, but RSI moving average shows confirmed momentum. If you found this lesson helpful, like and subscribe for more practical strategies. Comment below if you want a tutorial on a specific topic. I'll make it for you. Thanks for watching and I'll see you in the next video.